Hello everyone, my name is Patrick and I'm one of the partners in AllQuant. At this point in time, we are already in the second quarter of 2021. So I thought that maybe we'd just like to do a recap of the performance of the strategies that we teach in our courses. We're going to look at the individual strategies performance. We're going to see which ones did well in Q1 and which ones didn't do as well. And then we will look at the overall performance of the multi-strategy portfolio in Q1 of 2021. Okay, so as a backdrop, let's look at the S&P 500 performance in the first quarter. As you can see from this chart, it wasn't a smooth ride. Okay, in fact, the S&P 500 at a few periods, right, actually went through a few sharp drawdowns and then followed by a subsequent recovery. But overall, this is an upward trending market. So you can classify this as a choppy uptrend, right? Moving on to our first strategy, which is risk parity. Okay, this blue line is nothing but the S&P 500 performance as represented by the SPY ETF. And then the green dotted line is the performance of the IEF, which is the mid to long-term treasury ETF. And then the solid yellow line is the performance of the risk parity portfolio. You can see that throughout this entire quarter, the risk parity portfolio was mainly holding on to IEF with only a small allocation to SPY. Okay, so as a result, the performance is mainly following that of IEF. Okay, so as a result, the risk parity portfolio didn't do so well in the first quarter. So in fact, by the end of Q1, the risk parity portfolio is underwater. Okay, but this is not unusual because there have been periods before where due to a bond sell-off, the risk parity portfolio is also affected as a result. Okay, so moving on to the next strategy for trend following, as at the end of the previous year, the trend following portfolio is already holding on almost to the max stocks under its universe, right, in the Dow Jones Industrial Average universe. And throughout the entire quarter, the exposure remained more or less the same. Okay, there wasn't any significant change. And so as a result, you can see that the performance of the trend following model tracked very closely to that of the Dow Jones Industrial Average, which is represented by DIA, okay, the ETF that is tracking the Dow, right? But because of the leverage employed on the trend following portfolio, the performance of the trend following model is more volatile as compared to the Dow Jones Industrial Average. Okay, when there is a drop, you can see that the trend following model dropped more, and then when there's a recovery, the trend model actually recovered more. Okay, so basically the orange line is just fluctuating around the blue line. Okay, moving on to the volatility risk premium strategy. For the VRP model, it was basically holding on to a short volatility positioning throughout the entire first quarter. Look at the dashed green line. This is the VIX index. So you can expect that the VRP model performance is basically the mirror image of the VIX index. Okay, so when there is a spike in the VIX, there is actually a drop in the VRP portfolio. And then when the VIX index receded, the VRP portfolio started to recover and gain ground. So basically for the entire quarter, the volatility risk premium model managed to end the quarter higher than the S&P 500, just simply because it is holding on to a short volatility positioning. Moving on to the sector rotation strategy. At the beginning of the year, the sector rotation is basically holding on entirely to stocks. Okay, so the exposure is 100% in stocks. So you can see that the movement of that sector portfolio is pretty much in line with the S&P 500. But for February and March, it basically lagged behind the S&P 500 because it actually held on to a small portion of TLT, right? And the long-term treasuries actually sold off quite a fair bit in the first quarter. So that actually resulted in a drag in the sector rotation portfolio. Okay, so for the overall multi-strategy portfolio, because The only strategies that managed to keep track with the S&P 500 was the trend following strategy as well as the volatility risk premium strategy. The risk parity strategy suffered a loss, while the sector rotation strategy lagged the S&P 500. So overall, our multi-strategy portfolio, although performed in the positive region, but it was unable to catch up with the S&P 500 performance. In summary, okay, for Q1, our star performer is actually our trend following portfolio, followed closely behind by the volatility risk premium strategy. Our laggard or our losing strategy is the risk parity strategy. And at the overall level, our multi-strategy portfolio was positive for Q1, but it didn't manage to keep pace with the S&P 500, right? So this is a wrap-up for quarter one. So the year is not over yet. We still have 3 quarters left to go. We will do another report in the mid-year. Okay, we will relook at the performance of our strategies, and let's see whether there is any change in the relative performance among the individual strategies. Okay, and also let's see how our multi-strategy holds up against the SPY, right? Okay, with that, thank you for watching, and till the next time. See you, bye-bye.